Friends, welcome to Valvoways. So as mentioned in the last video on non-directional strategies, we will be taking up the various setups one by one in these videos, and we will try to code that in the simplest available platform, tradetron, so that we can see how the things work, and individual can take the code and then modify the code as per his risk appetite and as per his style of trading. So in this video we will be taking up two kind of straddles adjustments. The first one is that we will enter the straddle, and then we'll have the stop loss individual leg wise, and then once the one leg hit the stop loss, we will shift the stop loss of other leg to post. And if we want to take re-entry or we don't want to take re-entry, we will see how to do that. In the second case, what we will do, we will enter the straddle in both the indices, and we'll keep the leg-wise stop loss, and we will do the re-entry in leg-wise manner. Like if one leg hits the stop loss but the market reverses a bit, then we will take the re-entry in that leg, and we'll see then subsequent to that, if again market goes in the same direction, we will exit those re-entered legs, and there are various options after that, that we can do the straddle re-entry, or we can just leave that at for the day. So let us see. We will go first for the leg-wise stop loss and shifting the SL to post, which is the most commonly used straddle available. So we'll go for this first. So what I will do, I will shift to tradetron. So let me just make it little large so that it is visible properly. Okay. So this is the thing we will be doing here. We'll sell the straddle, and we will put the leg wise stop loss. And once one leg hits the stop loss, we will shift the stop loss to post. And let us see whether we want to take re-entry or not. We'll see that. So basically, these are the time-based entries. We are not putting any condition on entry other than the time. So let us see that we are taking an entry at 9:30. So this is the entry condition. Time is greater than or equal to 9:30. See, we can do is equal to also, but that means that the entry will happen only once at 9:30. Okay. After that, whatever happens, the next entry will take next day only at 9:30. But we will keep it as greater than or equal to in case we want to take the re-entry again. So time condition, then we have we are selling the straddle here. So we are selling the CE call Nifty, and here we are selling it on the basis of spot. So we are rounding off Nifty, Bank Nifty LTP to 50, and then this is the strike selection basically. If in place of this we simply do ATM 50, ATM plus minus n means 0 means current expiry, plus 1 means next expiry. Sorry, not expiry, it is for the strike. If we take it ATM step as 1 here, so it means it will take ATM plus 1. That is, if Nifty is 15,000, so it will take a strike of 15,050 in case of call options and 14,950 in case of a put option. So we'll take is 0. 0 means it will take a strike of 15,000 only. So if we take this ATM Nifty 0, the second option, then the strike selection will be based on the future prices. Sometimes you will see that future will be at discount to the spot, or sometimes it may be at the premium to the spot. So both the strikes could be different. Most likely in normal market conditions, they will be same, but it can differ depending upon the market sentiments. So I generally prefer to go with spot price of Bank Nifty for selection of strikes. So we'll do round LTP base 50. 50 is the base, okay, at which we have the strikes available, and then NF for Nifty 50. We don't choose here any weekly this thing, otherwise it will again become the future basis. Current week and one lot. So we do this and we sell the same way PE also, right? So nothing big here. Now we have sold both the call option and the sell option here. Call option and the put option. Now these are the repair conditions. In repair we define what we want to do with the open entered position. So in the first repair, what we will do, that LTP of 111. What do we mean by here? LTP of the instrument entered in set 1 in condition 1 and leg 1. So what is the instrument entered in set 1 condition 1 leg 1 is call option. So what we are doing here, we are taking the call option current LTP is greater than traded instrument entry price Nifty 111. So that means the traded instrument will give you the entered price at the time of entry for that particular instrument. So we are comparing that the current price of that particular instrument, that is call option, is greater than the entered price into 1.20. Means if the current price goes above the entered price by 20%, we will exit that particular leg of call option. I have put another condition here in end, that traded instrument repair condition 1 to 1. If that happens, this means that if that particular repair condition gets satisfied, then we will exit the current leg at its cost. Let me explain it. So this is the second condition. So if PE has hit the stop loss in this, then in the first condition for the call option, we are putting that if the PE, this means the second condition, repair condition, that is PE has hit the stop loss already. In that case, we are entering the call option, we are exiting the call option, at its cost. So when the LTP again becomes greater than the entered price of call option, it will exit. Same way the case is with put option. So first condition we are putting that it is 20% from the entered price, it has gone up, exit. Or if call option, this is first condition is for the call option. If the call option has triggered the stop loss, in that case we exit the put option as soon as it goes above its entered price, right? So it means this is the way we are shifting the stop loss to cost in case the other leg has exited. So we had put the condition here that if the entered price of call option, the current price goes above 20% of the entered price, we exit the call option. So this is the condition builder, position builder. So we are exiting the call option Nifty and current week lots 1. This is important here and we should not do any mistake in this trade instrument. So what we are doing basically here is that we are fetching the strike. So which strike we have to sell, buy? If we put simply ATM, it will buy the current ATM. So we should not do that because we have to exit the same instrument which was entered into through the entry condition. So to fetch the strike, we again use the traded instrument entry, and in place of price we use here the strike. So it will fetch the strike of what? Of the instrument entered in set 1, condition 1 and leg 1. So this will fetch that same strike and buy that strike of CE. Similarly, we exit the PE when 20% SL is hit or it is above its cost if the CE has already hit. So again we will see we are fetching the strike here of the instrument entered by set 1, condition 1, but leg 2. So leg 2 is what? This is the set 1, this is the condition 1, okay, and leg 2 is this one, right? So this way what this will do, that it will exit any leg at 20% and it will shift the other leg's stop loss to its cost in case the first leg has hit the stop loss. So that is all the strategy in this. Now if both these conditions, in this case if both the conditions has happened, that is CE has hit the stop loss and P has hit the stop loss at cost or vice versa, we see here in the universal exit condition that we have defined the exit time and the loss, stop loss, so 2500 rupees. So we can change this to any number depending upon what kind of mindset you have about the trading. Okay. So once this exit has happened, then it will go to reactivation time. If the reactivation time is 12 hours, it means the next trade will be taken place tomorrow only, the next day in the morning. Okay. But if we want to take a trade, say after 5 minutes or 10 minutes, then will keep this as 5 minutes and save it. So once the universal exit has happened, in that case, we will take the next trade after 5 minutes again after exit. Let me keep it 12 hours. Now, there could be a scenario wherein uh, that the C leg has hit the stop loss and it made a loss of say 1500, and then P leg exited at its cost without making any loss. So our loss will be 1500 only when the two legs have exited. In that scenario, our uh, universal exit does not happen because our universal exit is either time based or P&L based. So in that case, if we want to make the universal exit when both the legs hit, so we can put the condition here that traded instrument and repair once, one, and traded instrument 1 to 1. So both the repairs, that is C has exited and P has exited. So the universal exit will check whether time is 1520 or your stop loss has hit, which is not, time is not 1520 yet, but your both the left legs have exited. So in that case, it will make the universal exit and wait for the 12 hours to get reactivated. Now, suppose your stop loss is 1500 when your both the legs got exited, and you feel that your universal exit you can take up to 2500 rupees loss. So in that case, you would like to re-enter the both legs when the both the repairs have happened. That is, both C and P have exited. So in that case, what we can do? Let me just copy this one. So we will delete this condition, otherwise it will make the universal exit. And we will put the condition here in the exit of set 1. So let me just delete these things. So what this exit will check, it will check whether the first repair condition, that is exit of call, and the second repair condition, that is exit of put, have happened. If both have happened, it will exit this particular set, and once the exit happens, it again goes to entry condition for checking. So entry condition is this. So suppose it has exited at 12 o'clock. So this condition is still true. The time is more than 9:30. So again the entry will happen, and same process will follow again of 20% SL shifting at cost and all. So it will keep trading till we reach the condition of universal exit, either this or that. So this way we can keep trading within your maximum stop loss using the conditions which I have mentioned here in the exit, right? So that is all. You can do lot of variations of this. You can like change the stop loss. Suppose on Friday you want to do it, maybe you want to be doing it like say 60%. So you can make it 60% or 60%. Okay. Or you don't want to shift the stop loss to post, so you can delete this condition. So I'm not deleting anything now. See, whenever you make any change, you have to update the strategy, the box wise, and then the final update in the bottom. Otherwise, the changes will not get affected. Other things, 12 hours activation, you have to mention capital here, right? If you are using, you are in the marketplace, then you can publish the strategy and all, so on and so forth. So these are the time uh, after market. how much time it should not to take a trade. Okay, so we are entering at 9:20. Even if we keep 2 minutes, it's fine because 9:17 के बाद ही होगा जो भी entry होगा. So that's it. And if you want to limit the entry, like this will keep on doing the trades in a circle till your maximum stop loss is hit. So we can restrict the last entry time as well here. Suppose 14:30 we want beyond 2:30 के बाद कोई भी ट्रेड नहीं होना चाहिए, तो न्यू एंट्री नहीं होनी चाहिए, तो we can keep this way. Anyway, this is not the purpose of these are very small things. The purpose is the type of adjustment. So this is one type of adjustment and handling of the straddle, and this is the most common. Many people use it. This is famous 920 straddle, and it works also. The provided we keep it doing consistently, we can check it in stock mock or we can just check it in tradetron also. So that is the first kind of adjustment. Now we will move on to which is little cumbersome actually. Little more sets will be there. That is, we keep the stop loss still legwise, and then we take the re-entry. Let us see. We'll go to strategy 2. So selling Nifty and Bank Nifty straddles, legwise stop loss, and re-entry in the lost leg on certain amount of market reversal. Okay, so we'll quickly go through this. I have added certain more conditions just to give a explanation about entering different type of conditions. So let us go to the entry. So I have kept two kind of entry here. That the first entry which will happen at 9:20, I have kept the time as 9:21. So this particular set of conditions will take one entry only at 9:20, because after 9:21 we don't want any entry through this particular uh, set of conditions. Okay, quantity is 0, and entry and position detail I have used count here, so it is not required though, because we have put the time condition as well. Count means that your when the count is 0, no trade has happened, then this particular set will be used. If count is more than 0, it means already one trade has happened, and then the system will not entertain this particular set of information. It will entertain only this, because here, so count number is more than 0. So what I have done this in second set of condition is that the time is again 9:21 से ज़्यादा है, and last time is 14:45 I have kept 2:45. Quantity, your entry quantity is 0 and count is more than 0. Just I explained what does it mean. And I have put an additional condition here that the RSI should be greater than 40 or less than 56. So what does it mean? That your first entry can happen based on time. Okay, but if market goes some kind of momentum or some kind of direction and your stop loss got hit by the first entry, then your second entry should wait, because market is already in direction or in volatility mode. So till your 3 minutes RSI of the instrument underlying is between 40 and 60, 56, 40 and 56, then only the next entry will happen. So it will restrict your entry in a very one side trending market, which is very severe trend. So in that case, the RSI will be above 60, and if it is falling down, it will be less than 40. So it will restrict the entry in such scenarios. So these are the two conditions. And again, we are selling the same straddle. So in here we last time I have taken the round keyword, but here we can use find strike also, and we are selling 0.5 delta. So we are selling on delta basis, and we are choosing 0.5 delta here. So 0.5 delta means again the ATM strike. So either you can use the round word with base as 100 in case of Bank Nifty and 50 in case of Nifty, or we can straight away use the find strike keyword with delta as 0.5 for the straddle. And for the PE, again we are selling the same ATM strike, but in case of PE, the delta will be minus 0.5 instead of 0.5. So It's other way of selecting the strike, nothing else. Nothing, no rocket science into this. Now what we are doing, we are putting a stop loss of say 40%. So LTP of first instrument entered in the entry condition, that is CE, is greater than entry price into 1.4 times. So once the 40% that particular price has gone up, then we exit the call option, call Bank Nifty, and this is the strike selection. We select the strike, entry, strike, set 1, condition 1, leg 1. So this will exit the call option. Similarly for the P, also we are putting that the LTP of the second instrument is greater than its entry price into 1.4 times, 40% above its entry price. So we exit the PE and strike selection. Generally, what mistake we do while doing this strike selection through traded instrument keyword is that sometimes by mistake we keep it as price. So that is wrong. It will go and find out find a strike which is equal to the current price of Nifty or Bank Nifty. That is 36,000. So then a strike will be wrong. So we have to take the strike here. This is generally done mistake basically. So what have we have done here, that we have exited both the legs. We have put the condition to exit both the legs when the stop loss goes to 40%, right? So this is same as we have done in the previous strategy till now. Now suppose after exiting the, let me just take an Excel. Suppose we have sold Bank Nifty CES, the premium was 300 and this premium also was 300, entry premiums. Our stop loss leg wise will be 40%. So 40% of this into 1.4. Also we saw a wrong number. Anyway, 420. So once let us say this is C, this is P. So once this stop loss is hit at 420 of say suppose C, it has hit the stop loss. Now when the C will hit stop loss when the market is going up. So this hit the stop loss, and then market starts coming down basically. So it was at 420 when the stop loss got hit, then it will come to 400, 390 and so on. 390. Now the purpose of non-directional strategies is that we try to keep ourselves with maximum open initial open positions in the market. Like we had two positions in Bank Nifty here, one call and one put. So the purpose of any non-directional strategy will be that we handle a large range and we try to keep both the legs standing in the market, so that at some point of time the market will move and will come to the rate at which the entry happened, and then a decay, theta decay will take place. So that is the whole purpose. But now in this case, what has happened, that our call option has hit the stop loss. So we only have the put option now. So suppose now market start coming down. So we feel that okay, that was a spike or a sudden move, which was not very true. Our call option hit, but market is coming down. So we can re-enter that leg. Suppose it got hit at 420 stop loss. So once this premium comes down by say suppose 20%, so 20% of it, this will be what, into 0.8. So we'll say that if our premium comes at 336 again, entry was 300, stop loss hit at 420, and then again market is coming down and the premium comes to 336. So we do the re-entry again. So what will happen now? We will have a put option entered at 300, which will be in some profit now, and we have the C which got triggered at 430, 420, and then we re-entered that again. So we will have these two legs open now. Of course, this C leg would have done some damage already. Okay, it has done a damage of 120 points. Okay, but we re-entered it again. Okay, now the two things can happen, that market keep coming down. So our both legs will be open, our C will come down and P will go up, and the P&L will get decided at the day end, depending upon where the market is closing, as long as both the positions are open. But what can happen that again when we re-entered, market did not like it and market start going up again. Okay, so again this 3036 will move towards 400, 420. So now we have to take a decision, where do we exit this? We can keep a stop loss of say 20% into this. So we'll say that if again it comes to 403, we'll exit. Or there are other theories also, like we can exit the re-entered leg again at the original stop loss at 420. But what will happen in this case, that in first trigger we lost 120 points, that is 420 minus 300, and in this also we lose 420 minus 336. So this many points we will lose, which is almost 5,000 rupees in Bank Nifty. So in that case, our P leg may not balance this 5,100 because उसमें profit जो होगा वो around 3,000 or 2,500 होगा, so we will still have a loss. Okay, but here we are taking a chance again that the market may go in range again after re-entry, and we may recover whatever loss of this 120 points we did. So we may end up in flat or minor losses, or maybe in profit on some days like Thursday. Okay, so we have done till here in the code that we exit the legs at 40% of the entry price. Now we'll see the re-entry. So we exited the CE here, we exited the PE here. I just shown the retail also. Now what we'll do, we have to re-enter in this CE again if the market comes down. So let us put a condition here that if the LTP, that is CE LTP, which was entered in the beginning, is less than the traded instrument repair condition 1 into 0.85. So what does it mean? That is, the CE premium is less than the rate at which it exited at repair 1 condition. So this is CE LTP, and this value will be in our case 420. This one, repair 1 traded instrument means the rate at which this repair 1 has happened. So what this first set of condition is calculating, that our LTP has come below the exited price, SL price of 420 by 15%. I have put 0.85, so it means 15%. So in this case, if it comes down by 15%, that is 0.85. So what we are saying, that we will re-enter that leg again at 357, right? I have put some additional condition is also. That is, if we are doing this repair, that is re-entry, only if the repair has happened by repair 1 condition, that is your stop loss was hit, because otherwise it may sometimes give you a false trade. These are two conditions in OR which signifies the same. First condition says that your entered leg, that is CE, net quantity of the entered leg by set 1 condition 1 leg 1 means that is CE is 0 if it means that the stop loss was hit. In that case, if that LTP again comes down by 15% from the exited rate, then what we will do, we will sell the call option again. So NFO call Nifty Bank. In the strike selection, we can do both ways, like I have taken here, because we are entering in the same strike in which the CE was entered through the entry condition. So we can take the strike from set 1 here, entry set 1 condition 1. We can take it from repair 1s also, repair 1s 1 1 1, because repair 1 also we exited the same CE, so the strike will be same. So both the ways we can take the strike. Okay, so we re-entered the CE. So what we are here now. So we have, I'm just taking this example. We have the re-entry at 357, and we have the original entry of put option at 300. So these two will be running now. Similarly, in case of PE exited, then we may like to enter the PE also. So what we are doing here, that the PE premium is again less than the exited premium जो stop loss हुआ था 420 का. This condition will set because repair 2 में हमने PE exit किया था. So उसका रेट माइनस जब वो 85% पे आ जाएगा वापस, तो 420 into 87 is again 350. 85 is 357. So in this case, the P leg will enter again. This is the same conditions. And we are entering the P. Everything is same. Again, the strike is, I have taken from the entry P strike. We can take it from repair once and set one condition 2. That is second repair में जो exit हुआ था and leg is 1. So this also can be done. It means the same. It will fetch the same strike. Right? So in this case, what we have done, we have exited the legs at 40% stop loss. We have shown how to re-enter legs if the premium retraces down to 85% of stop loss level by these two conditions. And now we would like to keep a stop loss for these newly re-entered legs. As I explained here, that 357, and then we can put a stop loss of say this into 20% or whatever it is. That depends upon the individual. We can put the number of points also, 1.2. So now this time the new re-entered leg will exit at 428, or we can straight away keep that the new leg also should exit at original SL of 420. So how to put that? Now I am taking it the LTP of the CE is greater than the entered price through the repair 3, which is re-entry of call option into 20%. Right? In case you want to keep the stop loss same as original stop loss, then the LTP of CE is greater than, we can keep your traded instrument, set 1, condition 1, and leg 1. So this will fetch the original stop loss price at which the CE was exited, that is 420. So in this case, so I'm not changing it. I am keeping the stop loss as it is, 20% of the fresh entry level of this particular strike. Okay. And just to ensure that it takes the right trade at right time, I have put that the traded instrument repair once is that is the re-entry has happened. So we are ensuring that re-entry happened by this, and then if the re-entered price has gone by 20% of its re-entry price, then what we will do, we will exit the 1 minute. I think I made this one fifth. We'll exit the call option. So call, only thing we have to see here. See, we are dealing with the same strike. We can fetch this strike from entry also. Right? So we can keep entry and then set 1, condition 1, and leg 1. Or we can fetch it from the re-entry box also, re-entry condition also. Because re-entry condition is also same strike. Repair once, strike, set 1, condition 3, leg 1. So we have exited the C leg again at 20% of the re-entry price. Same way it is for PE also. Nothing much to see in this. Again we are taking it. We can take it from entry 112 as well, the strike. So this will complete the cycle of Bank Nifty this thing set of positions in this way. Now what we would like to do when the re-entered position also exits. See, when the re-entered position is exiting again at 20% or at the original stop loss, as I explained you, the damage would have already been done because we lost 120 point in in the first stop loss of CE, and then again we re-entered at 356, 357 and exited at 428. So कितना loss हुआ उसमें? 428 minus 71 point इसमें हुआ, so 191. So we have already lost 4785 in that particular CE. Okay, and our PE would have gone down by, if it has gone up by 20%, our PE would have gone down by say 12% or 13%. So it will be around minus, sorry, into, let us take it has gone down by 14%, 0.86. It will be at 258 P. So what will be the profit into that? This minus this. Only 42 points. We lost 151 points. So by the time we complete this particular set of executions, we would have done a lot of damage already. But still, if we want to take a re-entry, once this re-entered leg hits the stop loss, so what we can do, we want to do that, we exit all the positions in that particular set and take a fresh re-entry, because it has already got into a lot of mesh of hitting the SL, re-entry, and then hitting the SL again. So what we will do, that we will check or condition में. So 151 will fetch you, this will fetch you that the C was entered and it got exited. The trading instrument 151 repair means the C was entered and it finally got exited, and this will mean that P was entered and it got exited 161. So this will straight away fetch that yes, we have hit the stop loss, we have re-entered, we have again hit the stop loss of that particular leg, either CE or PE. That's why I kept OR. So this will exit all the open position in this particular set and again go back to entry condition to check whether we can take an entry. Now entry will not be taken by this because 921 was the cutoff time for this. Entry will be taken through this particular set of uh, instructions, set of conditions. It will also has a condition of RSI. So if RSI is not true at that particular time, it will wait for the RSI to fall in that range, so that the re-entry will happen only if the RSI has come down below 56 or above 40. So it depends upon whether you want to take the entry or not. Same way is for the second set may we have done for Nifty. There is no change. Same thing is there. Okay, we have sold the call option. We have sold the put option straddle at ATM. We had put the 40% exit condition, initial stop loss for call. This is exit. This is for put, 40% initial stop loss. Fetching the strike, 212 strike. Again re-entry. If the LTP comes down by 15%, then we do the re-entry again in call. Similarly, if the put has hit the stop loss and it comes down by 15% again, we take the re-entry in put option. This is the stop loss of the re-entered legs, 20%, as in case of Bank Nifty as well. Same thing, nothing. Only thing we have to replace Nifty, Bank Nifty by Nifty, and we have to replace set number by set number 1 by set number 2. Nothing else. We can copy and paste. This is again our re-entry condition if we want to. And of course, this will be the universal exit conditions. I have kept 1523 is the time. Minus 2500 stop loss. You can keep it any number. Suppose you want to give your strategy to more space to work, you can keep it 5000. But again, it depends upon how much risk one is ready to take. So if you are keeping minus 5000, it means you are allowing your strategy to stay longer in the market, but at the same time, you are ready to take that 5000 rupees loss. Okay, and we can PNL we can keep whatever we want. Suppose 6000. So these all depends upon how much play you want your strategy to do during the day. Okay. In this again, this initial stop loss are okay. I'm not justifying the numbers. Basically, 40% is right or 20% is right. I personally keep it different on different days. Like starting with 20% on Friday, 30% on Monday, 40% on Tuesday, 50% on Wednesday, and I go up to 70% on Thursdays. So you can keep this as 70% or 60% on Thursdays. So it will give you a strategy more, because why I'm keeping 70-60% is your premiums are low on that day. So it should have some space to work. And we know very well that if the strategy stays in the market on Thursdays, and if market goes in range or decay happens, then that is the point where we have high probability of making good money. So we can make a condition here that on non-expiry days it is 1.4, that is 40%, and the next expiry days it is let me just create that condition here. So on expiry days, today is equal to today is not equal to. So this is always left the instrument nifty bank. What it will do is it will check whether today is not expiry. So you will check all the days: Friday, Monday, Tuesday, Wednesday, and then if this condition satisfies, if stop loss goes to 40%, I exit. Or on, I'll keep this or, if today is equal to current week expiry, then I keep a stop loss of say 70%. So I will change this to 70% or 65%, whatever I want to submit. Okay. So these are the modifications which we can do depending upon the days, depending upon the risk appetite individual has. Okay. Somebody may like to have like 20% stop loss, no re-entry. That becomes the case of the first strategy we discussed. But when we are doing a re-entry, of course, we would like to have it slightly higher stop loss. Okay, which so that if market reverses, it comes down, we have some premiums to sell. Okay, so that is how it is. You can play around with the conditions. uh, I will keep this strategy link in the description box as well, so you can deploy this. You can why I have done this, I'm not giving a duplicate of this, because it is better for everyone that we go through these conditions and we'll get a knack of it, what is happening really. Simply duplicating means people may not like to see at all what is there in the conditions. So in case further you need any help, if you are not able to code, then uh, come back to me, I will help it out. And of course, I'm saying it for the people who are not very comfortable or conversant with the tradetron setup. There are experts who can do this in 2 minutes. So that is, it is not for those. So I will put this link of this strategy in description box, from where it can be deployed only. You can deploy it and match with the positions for the strategy which you have coded based on this video. Okay. So in the next video, we will take two different kind of adjustment and exits for non-directional strategies, and we'll continue this process till we cover all the probable exits, adjustment conditions. You can also share if you have any uh, special or the idea which has an edge in terms of. I will share mine, so that we will complete this in next 4 to 5 videos, some around 10, 12 adjustment and exit types. So I will conclude this video here, and I will request you that do subscribe the channel and press the bell icon also, so that you will get the intimation when the next video comes. And if you like the content, please like the uh, video, so that our community increases, people come on this particular channel, and we share the knowledge with each other. And any feedback is welcome. If you have any kind of strategy or logic related to um, non-directional strategies, please share. We will discuss in open forum here, and so that it can benefit everybody. Thank you very much, guys. Thanks a lot.